Mpo wanted us to look at Newmont mining, gold mining, the US listed on the US exchange. But Mpo, I quickly want to have a look at the gold graph because we cannot look at gold shares unless we look at the gold graph. And we can see clearly that the gold price is struggling with that red line, that 40-week moving average. Every time it gets there, it keeps it a resistance, and it is almost as if there is not enough buyers to lift and change that 40-week moving average, which is waiting at $1,806 into a support and keep it. Yes, we are sitting here with a descending triangle, which can be a positive formation should that upper band change into a support, and that is waiting around $1,843. My stochastic is sitting here in mid-zone, $55, but the critical level is that 40-week moving average, $1,806. The gold price has to start, consolidate above that level, and remain above that level before I can assume that this descending triangle can become a continuation pattern to take the gold price higher. So having said that, and keep that in the back of your mind, let's have a look at Newmont. Newmont Corporation, listed on the New York Stock Exchange, ticker NEM. It's nicely oversold, which means the probability of the instrument to bounce to higher levels is there. However, look at my candles. This week I am sitting with a bearish engulfing candle, telling me that the sellers are stronger and that they actually want to take the share lower. We have struggled to make new recent highs. My 40-week moving average is a resistance, and that is waiting at $62.14. So only when the share starts to consolidate above last week's high, $60.13, can I assume that maybe investors will make use of this possible oversold situation and use it as an opportunity to buy the share. Keep in mind, I'm also seeing a possible left shoulder, massive head, and maybe a right shoulder. So should Newmont not change that 40-week, $62.14, into a support, so it just bounces but loses steam again and builds on a right shoulder, that means Newmont mining can go a lot lower. And having said that, should that happen, this can also become a massive double top, a distorted double top, because this top is a little bit higher than that one. So a distorted double top that can take Newmont mining a lot lower. But if you want to buy above $16.13, strong support that has to remain in place is $56.15, and that 40-week moving average, $62.14, has to change into a support and remain one. Elizabeth wanted us to look at CocaCola. Ticker listed on the New York Stock Exchange, ticker KO. And we can see, Elizabeth, that since that week of the 19th of July this year, CocaCola has stopped making new highs. And that tells us it's maybe time to consider taking profit. My stochastic has broken downwards, and now the strong support that has to remain one in order to assume that the momentum to the top can continue is waiting there at $55.39. If I move this line a little bit lower, yes, we are sitting here with a possible massive inverse cup and handle formation that can take CocaCola to a brand new record high. But then that resistance around $57.57 has to change into a support again. And obviously that previous record high waiting at $60.13 has to change and remain a support in order to sustain the momentum to the top. 40-week moving average, critical level, $53.55. Below that level, I would say the long-term sentiment will change to negative again. But if the share continues to change these recent highs into support levels again, I can assume that the momentum to the top can continue again. Nice graph, beautiful possible inverse cup and handle that can take the share higher. But I mean, since July, the share has started making new highs, which tells us that the buyers have started to dry up, and there might be some more sellers coming in. Mark wanted us to look at Pinterest. Listed on the New York Stock Exchange, and Gonza again here. If we look at these technology shares, we can see they have stopped making new recent highs. Many of them have lower highs on them. Many of them have changed their 40-week moving average, that red line, into a resistance. And that tells us that many have taken profit, and should there be enough buyers, that want to make use of these oversold situations, because many of these technology shares are oversold, which means the probability of the instrument to bounce to higher levels is there, assuming there's enough buyers. And since that week of the 16th of August, the share has stopped making new lows, which is great. But now we want to wait and say, hey, we want confirmation that the buyers are stronger and that they are going to take the share maybe back to the 40-week moving average. So technically, we want the share to start to consolidate above $58.16. That would be your buying opportunity or your entry level, and a possible stop loss $51.95. Have a look at your average true range indicator. Make sure you are giving the share enough breathing space so that the stop loss just doesn't suck you in and spit you out if it's too small. But because of this oversold situation, because of that divergence, that blue line that has broken upwards through the orange line, it tells us that Pinterest can possibly be a bounce. And obviously, you can use Fibonacci levels, trend lines, shadows, or real bodies as possible targets. And the first one is there, obviously $63.15, $67.07, that 40-week moving average $70.37, and then $75.38. Easily it can bounce, but then there must be enough buyers. And you know the saying that we always repeat it, but it's so true. No matter how valuable a company is on paper, if there are not enough buyers to lift the share price, this share price will go nowhere. So make sure that the technicals confirm optimism, that you can see on the graph that there are enough buyers, and then you can maybe use that as an opportunity to enter. Stephen wanted us to look at Lyft. Listed on NASDAQ, another technology share, or in the NASDAQ index. Again, look at these lower highs. It bounced, found great high, recent high, pulled back, tested that 40-week moving average, kept to the support, bounced again. But have a look, that high waiting there at $63.07 is lower than that previous record high in the 15th of March, waiting at $68.28. Again, pulled back. Investors make use of the oversold situation, and now it's bouncing again. Should that bounce be lower than the previous bounce there back in the week of the 28th of June, what does that say? It tells us loss of momentum, a lower highs. We are below that red line, the 40-week moving average, and all the orange lights and red lights are flashing to say, hey, there's not enough buyers to keep on protecting this share. And what makes it even more scary is this window at the bottom, which means should there not be enough buyers, that this share can go back all the way to close this window between $32.12 and $34.96. Now remember, as long as the window at the bottom remains open, we assume that the buyers are stronger and that the momentum to the top is in place. But should the sellers become stronger and there's more profit taking, that window can act as a magnet where sellers go all the way back to close that window, and that's where buyers will maybe use this opportunity to accumulate this share again. Obviously, strong support, Stephen, that has to remain in place for Lyft is waiting at $44.06. Yes, it is oversold, so buyers might want to make use of this opportunity to accumulate the share. The strong level of resistance that now has to change into a support is waiting at $51.24. Above that level, we can hopefully see a higher bounce on Lyft going forward. Leon wanted us to look at Uber. Listed on the New York Stock Exchange, same story. Made a high, pulled back. Made a new high, but that high was not as high as the previous one. Again, same story. Look at it. We are below the 40-week moving average. Yes, the share is oversold. The stochastic hasn't confirmed a positive divergence yet, but since that week of the 16th of August, the share has stopped making new recent lows, which tells us that can be an opportunity to possibly accumulate the share. But the strong resistance that has to change into a support, in other words, the share has to start to consolidate above it, is waiting at $41.86. And, it almost sometimes doesn't make logical sense to say, hey, why do you want to buy a share at a higher level than where it currently is? But remember, as technical analysts, we sometimes want to wait for confirmation before we enter into a position, confirmation of optimism. So we assume then, hey, should that resistance now change into a support, we assume then that there's enough buyers and that the share can possibly go to my next resistance level. And obviously the same applies with the support. As soon as the support level starts to change into a resistance, it tells us that, hey, the sellers are actually stronger, there's not enough buyers to keep on protecting the share, and that the momentum to the bottom can continue. And that critical support level is waiting there at $38.84. Below that, Uber will warn again, and we can see lower levels. And I mean, this is a share that traded as low as $13.71 in March 2020, after the pullback. And I mean, massive rallies, but the lower highs on many of the technology shares is a concern, and the fact that that 40-week moving average has changed into a resistance obviously is the biggest one. Ishmael wanted us to look at Tencent. Listed on the Hong Kong exchange. I mean, this graph looks very similar to the previous graphs, but some of the viewers might have noticed and know that we previously spoke about this massive head and shoulder formation. And it hasn't completely played out yet, but it shows us again that should any warning formation at the top, double top, a triple top, or a head and shoulder formation appear, and that share starts to change the 40-week moving average into a resistance, you should pay attention. You should come closer to your graph, and the orange lights are flashing. You should just open your eyes and see it. So at the moment, yes, Tencent is oversold. Yes, the share has stopped making new lows. We can see a strong support there around $423 Hong Kong dollars. But look at this week's candle. This long shadow at the top of the candle tells me that, hey, the high of the share this week is 529 Hong Kong dollars. But the sellers were strong enough to bring the share all the way down to currently close it at around 496. So that tells me, even in the possible optimism of the oversold situation, the sellers are keen to take profit. So what needs to happen, Ishmael, is this week's high of 529 Hong Kong dollars has to change into a support. I think it can easily bounce, maybe back to, that 40-week moving average. And very important, let's have a look there. There's a window, a gap there. Let's see if it's been closed. So this week's high is 529. The low of that candle is 529. So yes, my window has been closed. So now the question is, did the buyers only wanted to close the window and then the sellers came in to take it even lower? I don't know. Time will tell. But $529 have to change into a support. And obviously below these $422 support levels, the tears will flow again around 10 cents in Hong Kong. And just for those of our viewers who didn't see the previous recording on 10 cent, the full target of this head and shoulder, if I take the length of the head, can take 10 cents back to 380 Hong Kong dollars. Don't forget to send through your requests for next week's show. Have a fantastic week. Take care.